Welcome to the August edition of the Galileo Capital Update. I'm joined today by Theo again. Theo, welcome.
Yeah, hello, Warren. We're getting through these strange times. I think if you told us in the beginning we're going to sit here 4 months later, I don't think we would have believed it. Let's hope it's not going to be for another 4 months.
Yeah, I think it's the two things about this that have taught us lots of lessons. One is that the predictions that we heard from a lot of the experts in the early days were wildly out, a lot of them, and some of the people that were considered crazy or speculating that lockdown is going to be a very long thing, etc. Those crazies have actually proven to be reasonably accurate. And it's always interesting, those outlier predictors or the outlier forecasters often can be horribly wrong, but sometimes there's merit in what they're saying. What worries me a little bit about this whole COVID thing is listening to the Harvard Business Review do an interview with the CEO of Merck Pharmaceuticals. Interesting thing about Merck, they've developed 4 of the 7 new vaccines that have been developed in the world in the last 25 years. And that's quite a scary number if you think about it. So 7 completely brand new vaccines have only been developed in the last 25 years. One company has developed 4 of them. That means the rest of the world has developed 3. And the CEO of Merck was saying, that these forecasts that we'll have a vaccine developed and done by the end of this year and distributed through next year, he thinks is not accurate at all. He said, just think how long it's taken to try and get an AIDS vaccine, and we're no closer to an AIDS vaccine than we were at the start. And so I think for our investors, on this, listening to this, it's an important point. I think we need to maybe make peace with the fact that COVID in one form or another is going to be around in the world and in the world's economies and in society for much longer than we all thought. And maybe mentally and from an investment perspective, we need to approach this as something that's going to be part of life for longer. And maybe move out of a time frame of living in month to month or every second month, hoping that everything's going to be fine in 2 months' time. But the reality is we'll adapt more and we'll understand it better and we'll live differently. But potentially this is part of our lives for much longer than we all thought.
What for me is just a very interesting from a point of departure is if you listen to politicians or bankers or the media, they've got a lot more confidence in trying to get dates and numbers and things on it. If you listen to medical professionals, either from an academic point of view, from the pharmaceutical industry point of view, from a research point of view, they almost very much saying, look, guys, we actually don't know. There's an element of please accept that there's a lot of things we don't know about this. There's a lot of issues we actually don't know. Their attitude is completely different than politicians' attitude. And I think we need to move slightly away from the attitude of politicians or market commentators towards the attitude of medical professionals who's almost humbled by what they say. So you, on the one hand, you have this humble, we still got a lot to learn. We're working very hard on it. We can't give you the answers. And on the other side, it's the mindset of the predictor and the politician. And I think in the beginning, people might have listened too much to the mindset of the politician and the predictor and not enough to the humble medical professional say, there's too much, there's a lot of this we actually don't know.
Yeah, absolutely.
And as time goes on, I think hopefully we'll move away from the politician trying to make a prediction more towards the medical scientist with a humble opinion on how things can or cannot turn out in the long run.
Absolutely, Theo. And I think so if we move to the things that we do know a little bit more about, some very interesting news landed at the end of July around and that's always been a politically sensitive topic in South Africa. So what are your thoughts on that funding?
Look, I think let's take it back. About a month ago in the NEC of the ANC, they said that all that's actually left for Treasury to do is to get the best possible terms. And I think that was kind of, now we know we're going to get that. Now, remember, this is a specific funding facility, and it's got a very specific nature, and is specifically for COVID. So this is something different than assistance from the IMF. This is very much COVID related. The term also is specifically around a rapid finance instrument to assist with COVID. That's the one thing, and that's what it's aimed to. But if you look at the press release and the comments from the IMF, I think there's a hell of a lot of strong points made in that. Number one, they note quite clearly that for the last decade, South Africa's government expenditure has increased, but the economic growth was not there. And there needs to be specific redresses made in terms of restructuring of the economy, in terms of SOEs that's costing us too much money. And then they say very specifically, if you look at the additional budget that was tabled, there was comments made and predictions made about restructuring. They would like, and they go as far as to specify the October mini budget. Now, what happens each year in October? The government gives a 3-year projection of income and expenditure. And Tito Mboweni, our Minister of Finance, actually noted that details will be in that. So they specifically note that they will need to see what steps are we taking to restructure the economy. And if you read through the lines, it's whatever was predicted. We would like to see some implementation. So although this is a specific funding requirement that was drawn down specifically for COVID, the IMF document has got a lot of detail, a lot of orange light, a lot of warnings, and a lot of how we should go forward. Now, if I just look at the two elements that for me is quite interesting flowing from that. The first one is just look at how difficult it is for the business rescue practitioners to get the 10 billion rand signed, sealed, delivered. It's not in the past. Treasury is not the ATM or the quick buck or the money on demand anymore. There is a lot of debate about how, what, where, what can be done, what can't be done. And I think that shows you the purses getting closed. Then the zero-based budgeting that the Minister of Finance is talking about. If you look at media reports, and two departments where you are seeing it is tourism, and also you're starting to pick it up in agriculture, where the department is saying to you that we are in the process of cutting budgets, we're in the process of reprioritizing expenditure, we're in the process of stopping certain strategies that we're busy with. Now that is what happens if you zero-base budget. You question each and every expenditure, and hopefully the signs we are seeing shows that we are seeing the first elements of that. But then, Warren, on the negative side, we're starting to see some load shedding again. So clearly at Eskom, it is not what we hoped for. There seems to be pressure.
Absolutely, Theo. And I think before I touch on Eskom, just to finish on your point, those business rescue practitioners we're talking about are specific to SAA. One of the real sticking points for all of us as taxpayers. So it's good that the purse is not open anymore. So let's talk about Eskom. I think there's two parts to understand about Eskom. One is about the performance of Eskom as a power generator and what's happening and what's not happening. And then the second part is around the funding and the restructure of Eskom as a company. And so I think if we talk about performance, certainly, the fact that the economy has been massively hamstrung by the whole COVID issue, it's disappointing then that it gets an additional knock at the worst possible time by load shedding. And so I think that it's, from a hope perspective, that's always a big issue. We lose a lot of hope, and it's the sentiment of the country is massively affected by something like load shedding. And it shakes investors' confidence a lot, and I think that it's a really big issue. The positive side is that I think the CEO of Eskom, Andre de Ruyter, has been very transparent in terms of what the problems are, what their strategy is, and how they plan to fix it. And I think I'm always watching the Eskom watchers who write a lot about Eskom, and who are not part of the state engine or not part of the PR engine, and you can see from their engagements with Eskom that they're getting a lot more information, have a lot better understanding of the issues, And I certainly think that, that this performance issue, Eskom's been very clear that it will be around for a couple of years still, but at the same time, I think we have a better understanding, at least as a country, of what's going on, and hopefully the plan is in place. So I think as a starting point, that that gives me a little bit of, I'm not going to say comfort, it's a terrible situation, but a little bit of hope that at least the right people are driving the bus now to move that in the right direction. And then I think the second thing around that performance issue is that it's absolutely certain, at every level of government and in society, that there is no more monopoly on power generation within Eskom. And rather than it being lip service, we're seeing new bid windows being opened for independent power producers to come on stream. And by all accounts, that's going to accelerate quite a lot. So, where we're seeing, Eskom producing much more than 90, probably close to 96, 97% of all the power in South Africa in the next few years, that number will drop quite significantly. And so I think that we've got a little bit of hope, around the performance of Eskom. The second thing is then the restructure of Eskom as a legal entity, but also the funding of Eskom. And I think there we have some interesting moves happening. So the first, it's interesting to talk about a restructure of a legal entity. If we think about a company like Old Mutual, it took them 5 years to break Old Mutual up into its constituent parts, where they left some parts in the UK, brought some parts back, and broke off their short-term insurance businesses and the like. So for in theory, very efficient business like an Old Mutual to be broken up to take 5 years, it's hugely optimistic to expect that something like Eskom will be broken up in a 1 or 2 year period. What we can see is that there is real progress on the restructure of Eskom. It is broken up into three entities now, 3 divisions, and certainly you can see that process is carrying on full steam. There's no backtracking as far as government or Eskom is concerned. They are progressing. The biggest criticism will be that they certainly were far too optimistic as to how quickly that whole breakup would take place. And I think what gives me a lot of hope, just in a broader sense, is we're seeing a lot more scope from government to say that government cannot be both the enabler from a regulatory point of view, from a legislation point of view, and the constructor of the reforms that need to happen in South Africa. If we go back 5 years ago, we would have had people like Pravin Gordhan saying, that government needs to be the driver of all of this, economic reform and the growth of the country, etc. And now what we're seeing is, different voices, but from the president down, saying, actually, what needs to happen is we need to create the enabling environment, and then we need to allow business to go forward. And people like, Patel, who in the past, a lot of us would have perceived as a real statist, someone that believes the state must do everything. He's certainly been very vocal in the last while about the changes that state have made, and saying that these are mistakes they've learned from. And that a government can't make thousands of decisions in a month that are necessary to run business and to develop and to grow. Businesses can do that. And what government needs to do is really partner with business. And I think for me that's a very hopeful scenario. And then I think just to touch on the funding of Eskom and prescribed assets, because the two are quite closely linked in a lot of media speculation. I think what we are seeing is more and more, policy decisions, or if not decisions, at least discussions around creating more scope for retirement funds to invest in more infrastructure projects. And I think that's a really important point. It's not forcing retirement funds to invest in Eskom specifically. I think that was how it started out, and I think certainly there'll still be quite a lot of pressure on that. But my understanding and my belief is that when we see amendments to the laws around retirement funds, specifically Regulation 28, it will create more scope for retirement funds to buy into projects that they believe will deliver a good return for their members. And it's not just about bailing out Eskom and giving them a blank check to keep going on the problems that they've had in the past. This is about saying, for example, invest in a toll road, or invest in a rail line, or invest in a power plant that gives you a much more certain return, and that return gets paid to members, and members then use that for their pensions. And so the issues with Regulation 28, for example, it's quite vague in terms of how much a pension fund is allowed to invest in projects like that. pension funds are very scared of being too broad in terms of the way that they invest at the moment, for fear that the regulators take them on, or their members sue them or something like that. So they're looking for more regulatory scope to be able to invest. It's very different from the prescribed assets conversation that we heard in the past, where the ANC initially were proposing that pension funds be forced just to fund things like Eskom. I think that's probably gone into the annals of history. And much like the whole expropriation without compensation debate, when we first heard about it and what we know about it now, it's much less scary. I think that for me is important to understand. Eskom funding, it's going to take a long time. There will be action that will be taken to sort it out. There's probably, I think you've said it in the past, about 150 billion rand that the country is just going to need to absorb, that we're just never going to get back. But certainly for the rest, there will be solutions that are market friendly, that aren't going to be scary to investors, and potentially create some opportunities for retirement funds to go. So I must say, the devastation of something like load shedding on top of COVID is really bad, and we can't underestimate that. But at the same time, I think there is a lot going on that isn't necessarily getting accurate press coverage at the moment to solve these problems. So Theo, if we then move slightly broader to kind of the global environment at the moment, politically and investment-wise, there's a heck of a lot going on. It sometimes feels like actually at the moment South Africa is a bit more stable than the rest of the world. What are you saying to our clients?
Warren, yes, you're right. I think let's just start with the US. We have on the 3rd of November, we have the American presidential election. Now, 3 or 6 months ago, it would have been a no contest. There was no question that the current president, Trump, would have won, and he would have probably won quite comfortably. The point is COVID changed that completely. And if I know that we cannot base anything on predictions, so it's not my prediction, but The Economist runs a real-time predictor of how they see this election panning out, and they run it on two bases. They run it, number one, on the popular vote, and then on the college that actually elects the president. Remember that Hillary Clinton won the popular vote, so did Al Gore, and none of them became presidents. And in this case, we know that Donald Trump did not win the popular vote. The key is, according to The Economist, they believe there's a 99% chance that Joe Biden would win the popular vote and a 91% chance that Joe Biden would win the election. So that's The Economist. We know they've been wrong in the past, but the point I'm making is not that Donald Trump is not going to win or that Joe Biden's going to win. It's uncertain at this point in time. Where it wasn't uncertain, it's uncertain. So the element I'm emphasizing is there's uncertainty as to the outcome of that election. But that's on the politics side in America. If you look at the market and if you look at the S&P 500, if you take 5 big internet technology stocks out and you talk about the S&P 495, that's in a complete different situation than those 5 stocks. Those 5 stocks are the big, well-known internet companies that we all know, Microsoft, Google, Amazon, that we all know exactly what they are. Now, those 5 stocks are already up since the beginning of the year quite handsomely, but that's not the American economy. So to say the American market is expensive or is overvalued, you have to be very careful. 5 stocks are making all the running. The rest of the market is not there. So one must be careful to talk about valuations. Europe is starting to look more and more interesting. And I do think from our point of departure is that you have, from an investment point of view, you might want to live in South Africa forever. You might have no plans to immigrate. Your children might have no plans to immigrate. But from an investment point of view, you have to view yourself as an international investor. You are allowed, in terms of our exchange control regulations, and from an investor point of view, we believe you should be a global investor. That means you have to have a balance between your South African investments, and this balance is according to certain principles that we believe in. But I think they're the best ways to talk to your advisor and make sure that your balance is in line. Specifically with the rand now slightly stronger, that might give the opportunity, if you underweight internationally, to get that weighting up. So be careful. America might be volatile, and remember that we are now going to see, as we carry on into the third quarter, we are going to see the negative economic news worldwide of the second quarter. That is going to come, but it's not going to be a surprise. Everybody knows that our economy in the second quarter will probably down between 20 or 30%, take your number. Worldwide, it's going to be shocking. But the point of departure is that we know. That is in the market. So don't get scared when that happens. Rather focus on your diversification and make sure your balance between local, international, stocks and bonds are in place. Because this, at some point in time, we're going to come out of this. It might take longer. It might be quicker. I've got no idea. But the point is, make sure you use this opportunity to cultivate your portfolio and get it in line with your long-term objectives.
Yeah, absolutely. And I think, we often get asked about our exchange rate views. And so, we haven't changed that view for a little while now, in that we think if you've got rands that you need to convert, we would be converting rands to dollars at any time when the rand is stronger than 17 rand to the dollar. In other words, if it's sitting at 16.50 or 16.40 or 16.70, we think it's a good time to go. And 20 rand 50 to the pound. And I think the important point there from our perspective is we're not too worried about phasing that purchase decision. In other words, if you've got a lump sum, we would convert at those exchange rates or better, and we wouldn't necessarily do it in batches because we think the potential for the rand to swing the other direction is real. However, on the other side, once you've got your money converted to dollars or to pounds, then we'll be phasing that money into the investment markets over time. Because of that volatility, we think that we can be a bit cautious and take somewhere around 6 months to feed those dollars, let's say, for example, into the markets over that time. But certainly converting rands, we would be doing it straight away when the rand's in our target. And for people that have been listening to us that potentially did it at 16 rand 90 and they've watched the rand go to 16 rand 50 and they're upset that they've missed out on that 40 cents, I think that just shows you the volatility of currencies. But it's also important to remember that when you make a decision like this, it's not a trading decision. It's not a 3-month call or a 6-month call. You're making a decision for the next 5, 10, or 20 years. And firmly, in our view, we believe that that if you look back in 10 years from now, the difference between 16.90 and 16 rand 50, for example, to the dollar will be insignificant because the rand will be materially weaker than that. And so we think you'll be glad that you've made the decision. But importantly, to your point, Theo, that you shouldn't necessarily view this just as a trading opportunity. It's a structural change that you make to your investments, dependent on your financial position. And once you've made it, we suggest you then stick to that strategy. So certainly, don't try and speculate on currencies. The certainty is probably that you'll be wrong. Make your calls, make your decisions, and then be happy that if it moves against you a little bit by 20 or 30 cents, that's not a 10-year problem. That's a few month problem.
Yes, I fully agree with you. I think this is we get caught up in short-term movements, and then we judge ourselves in terms of a 3, 6, 12, or 18-month movement. If this is a 5, 10, 20-year play, be very careful. Rather stick to the principles than market timing. And in the end, there's absolute no academic proof that you'll get market timing right. Even if you're right 1, 2, or 3 times, that doesn't mean you're going to be right the next time.
Yeah, that just means you flipped the coin enough times that it is going to go against you one day. So I think on that note, we'll wrap it up. Just to say, maintain course with your investments. Don't get too caught up in the hype of either of the media or the commentators. I think there's a lot of inaccurate reporting happening around the world at the moment, and certainly the bad news is obviously what everyone wants to report because that's what's getting the views and the listens and the reads. But that doesn't necessarily reflect actually what's going on. I think we're seeing that so much right around the world at the moment that our viewers don't get too panicked by what you read or what you hear. And certainly the WhatsApp groups that everyone's on, those are not sources of reliable information about anything, and not even rugby predictions. So in our view, ignore those as well. And if you're uncertain or you're worried, speak to us. We are here for you. We will help you distill the noise from the news. And good luck and stay safe.
Yeah, I think I can just I agree with every point. I think at this point in time, rather focus on staying healthy and talk to your friends, your family, your loved ones, but not read too much in those WhatsApp groups. And I wish I will see each other in a month's time. Hopefully by then we can say that we we might be closer to the end of this uncertain time, but hang in there and all the best.